Yesterday, Opendoor stock collapsed. The share price dropped almost 14.5% in a single trading session. This sudden move shocked traders, especially after the stock had been on a strong rally in the days before. So what exactly happened here? In this video, we are going to break it all down step by step. We'll look at the raw numbers, the reasons behind the sell-off, the meme stock hype, the technical picture, and what comes next. By the end, you'll have a clear view of why Opendoor fell so hard and what investors should watch moving forward. Segment 1. Price Action Recap. Let's begin with the numbers. On Wednesday, Opendoor closed at $4.02 per share. That is a fall of 14.47% compared to the previous close. Trading volume was about $1.3 billion in value, which is still huge, but down 43.9% from the previous day. Now here's the important context. This fall happened immediately after a strong rally. In just the previous 5 trading days, Opendoor had climbed more than 32%. So you can imagine investors who had jumped in on the way up were quick to take profits, and momentum traders switched sides. It's like running up 10 flights of stairs in excitement, only to realize that the elevator was broken the whole time. The climb was fast, and the drop was even faster. Segment 2. The reasons behind the fall. Now let's look at the reasons. There are 3 major drivers behind this drop. Reason number 1, Federal Reserve expectations. Investors had been betting heavily that the Fed was ready to cut interest rates soon. Lower rates usually help the real estate sector, which is Opendoor's playground. But when the Fed didn't deliver the clarity that traders wanted, optimism cooled. And when the macro optimism fades, real estate tech stocks like Opendoor take the hit. Reason number 2, earnings guidance. Opendoor gave guidance for the third quarter of this year, and it was disappointing. The company forecasted revenue between $800 million and $875 million. Analysts were expecting closer to $1.06 billion. That's a major miss. Think of it this way. The market ordered a full pizza, but Opendoor showed up with just a half a slice. Naturally, investors felt cheated and adjusted their bets. Reason number 3, leadership change. Chief Executive Officer Carrie Wheeler resigned. The company quickly announced that Srisha Radhakrishna would take over as interim CEO. In his early statements, he highlighted artificial intelligence as a, quote, core primitive for the company's future. That sounds exciting, but investors were not convinced. They wanted stability and clear leadership, not buzzwords. Uncertainty at the top only added to the selling pressure. Segment 4. The meme stock factor. Next, let's talk about the meme stock angle. Yes, Opendoor has also become part of the meme stock universe. In July, retail traders pumped the stock up dramatically. AI was the keyword. Reddit threads and Twitter posts were filled with rocket emojis. People shouted, "Open is the next moonshot." But here's the problem. Meme stocks are powered by emotion, not by fundamentals. When the hype fades, the stock has nothing solid to stand on. It's just like fireworks. Bright, loud, exciting, but gone in seconds. Yesterday's crash was exactly that. The fireworks show ending and reality taking its place. Segment 4. Technical levels and what's next. So what comes next for Opendoor? From a technical standpoint, there is key support around $3.78. If the stock breaks below that level, more downside could follow. From a fundamental standpoint, the next big moment is earnings. Opendoor will report third quarter results on November 6, 2025. That will be a make or break event for sentiment. And finally, leadership. Markets are waiting for a permanent CEO announcement. If the company brings in someone strong with a clear strategy, that could restore some credibility. If not, uncertainty will continue to weigh on the stock. So in the short term, expect volatility. Traders will treat the stock like a playground. But in the long term, Opendoor must prove that it has real fundamentals and not just social media hype. Segment 5. Recap and outro. Let's recap. Opendoor's big crash yesterday was driven by three villains. Number one, weak earnings guidance. Number two, the resignation of the CEO. Number three, meme stock hype fading out. Put together, those three factors created a perfect storm for a 14% decline. So now the question is, will Opendoor bounce back, or will it sink further, like a house built on a weak foundation? Tell me what you think. Do you believe Opendoor will recover, or is this just the start of a bigger drop? Share your opinion in the comments. If you found this breakdown useful, don't forget to hit the like button, subscribe to the channel, and turn on notifications. That way, you won't miss the next big stock market move. Thanks for watching, and I'll see you in the next update.